Hello, it's Justin Woodall, your trusted Athens real estate advisor. Today I want to talk to you about mortgage interest rates. So what's going on with interest rates? And people ask all the time, what's the current rate? Where are rates at today? And depending on who you talk to, your quotes are going to vary slightly depending on whether there's points or not points. So I'm going to talk very in generalities in this video, but generally speaking, rates are rising. They've gone up quite a bit over the last several months. To kind of give you a ballpark, from the beginning of the year, they were hovering around 4%, maybe a little above 4%. They're getting closer to 5% now. They haven't quite gone up a whole percentage point since, in this year, but they are rising. And so what does that mean to you as a home buyer, and what does that mean for you as a home seller? So as a home buyer, what you need to think about is because rates have gone up, and I did some quick math just to give you an example of how that can affect your payment. If you're taking out a mortgage for $200,000 and the rate goes from 4% to 5%, goes up 1%, that's going to change your payment about $125 a month. So it's not huge, but it's a lot. I mean, $125, you can do a lot with that in a month. And over the course of a year, that really adds up. So it definitely makes a difference in affordability of what you as a home buyer can afford as rates continue to rise. So the same house that you may buy today for the same price that you could have bought 10 months ago, you're going to pay more for it today on a monthly basis than you would have paid had you bought that house 10 months ago. Also, what that means is prices are still rising. So as prices continue to rise, that house that may have cost $200,000 a year ago may cost $210,000 now. And so not only are you paying more on a price and you're financing more, but with rates going up, it's kind of a double whammy. So for buyers, if you've been on the fence, if the rates continue to climb, if the prices continue to climb, it's going to cost you more in the future to buy. Now, we don't know what the future holds. Prices could level out, they could fall, rates could fall back down again. We don't really know, but the trend right now is prices are rising, rates are rising. So it's costing you more and more as each month goes by to buy the same house that you could have bought before. So does that mean you need to go out and buy right now? Maybe, maybe not. That's for you to decide, because I don't know what the future holds. What does it mean for you as a home seller? Basically, if you're going to buy another house, if you're going to sell what you have and buy another house, the same thing applies to you. The payment on the next one's going to be more. As prices rise, you should be able to sell your house for more if they continue rising. And there are some economists that feel like as rates rise, that prices are going to level off. So if you're thinking about selling, if prices do level off, you're going to be better off to sell sooner rather than later. So I don't have a crystal ball. I don't know what the future holds, but what I do know is that rates are steadily climbing. That does impact affordability from a monthly basis. And we're starting to see a little slowdown in the market here towards the end of the year. It's kind of normal for this time of year anyway. So I'm hoping as a normal year, normal things happen after the first of the year, that we will see things really start to climb again. Because it is normal for a little bit of a slowdown this year, but it seemed like it may have come a little bit early. But overall, market is still strong. Homes are still selling. There's still a shortage of inventory, but again, if buyers pull back because of that affordability issue, it could affect pricing in the future. So only time will tell. I don't know what the future holds, but just want to keep you updated as I see what's going on in the market.